Ladies and gentlemen, good day and welcome to ALKEM Laboratories Q2 FY21 earnings conference call hosted by Motilal Oswal Financial Services Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star 10 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Tushar Manudhane of Motilal Oswal Financial Services. Thank you, and over to you, sir.
Thanks, Aisha. Welcome to 2Q FY21 earnings call of ALKEM Laboratories. From the management side, we have Mr. Sandeep Singh, Managing Director, Mr. Rajesh Dubey, Chief Financial Officer, Mr. Amit Ghare, President, International Business, Mr. Yogesh Kaushal, Senior Vice President, Chronic Division, and Mr. Gagan Borana from Investor Relations. Over to you, Gagan.
And thank you for taking out time and joining us for ALKEM Laboratories Q2 and H1 FY21 earnings call. Earlier during the day, we have released our financial results, and the same are also posted on our website. To discuss the business performance and outlook going forward, we have on this call the senior management team of ALKEM. Before I proceed with this call, I would like to remind everybody that this call is being recorded and the call transcript would be made available on our website as well. I would also like to add that today's discussion may include forward-looking statements, and the same must be viewed in conjunction with the risks that our business faces. After the end of this call, if any of your queries remain unanswered, please feel free to get in touch with me. With this, I would like to hand over the call to Mr. Sandeep Singh to present the key highlights of the quarter and the strategy going forward. Over to you, sir.
Good evening, everyone. Welcome to our quarter 2 of FY21. I would briefly touch upon the key performance highlights of the quarter gone by and would then leave the floor open for questions and answers as usual. While we continue to fight against COVID-19 pandemic, the government announced multiple rounds of unlocking. The Indian pharmaceutical industry has witnessed gradual recovery in new prescription generation as doctors and healthcare professionals resume their services. This has led to a sequential recovery in our India business, more specifically in our acute care portfolio. Compared to the last quarter, our India business grew by about 35% quarter on quarter, and most of our large brands are outperforming in their respective markets. In key therapies like anti-infectives, gastro, vitamin and minerals, cardiac and anti-diabetics, we grew ahead of the market in the quarter as well as for 6 months ended 21. However, given that the significant portion of our India sales comes from anti-infective segment, which witnessed a year-on-year decline during the quarter and first half of the year, our secondary sales growth as reported in IQVIA has been on the lower side compared to the broader market. Our trade generic business continues to grow well and has helped us mitigate some pressure on our branded prescription business. Coming to international business, I am happy to share that during the quarter, our international business registered a healthy growth of 16.4%, mainly led by our US business, which grew by 18.6%. The growth in the US business during the quarter in dollar terms was also strong at 12%. Further, over the last 3 years, ending September 2020, our US business revenues have more than doubled. This growth has largely been driven by our new product launches, coupled with market share gains in some of our existing products. Investment in R&D and ensuring high standards of regulatory compliance has also been an important contributor towards this performance. During the quarter, we invested 139 crores in R&D, which is 5.9% of operating revenue. We filed 1 ANDA with the US FDA and received 4 approvals, which includes 1 tentative approval. With this, we now have a fairly strong product pipeline of 149 ANDAs already filed with the US FDA, with nearly half of them waiting approval and commercialization. Timely new product approvals and the launches would be a key focus to drive growth in the US market. In terms of regulatory status of our manufacturing facilities, all our 6 manufacturing facilities in India and the US and supplying to US have received EIR as on date. We continue to invest in our people and technology to ensure our facilities comply with global regulatory standards. Talking about some of the financial highlights during the quarter gone by, the savings and marketing expenses during the quarter, coupled with our ongoing efforts towards productivity improvement and process optimization, helped in the EBITDA margin showing significant improvement to 25.4% compared to just 20% last year. Also during the quarter, we showed improvement in our working capital cycle, which was impacted by COVID-19 in the last couple of quarters. We have also delivered significant improvement in our operating cash flow during the first half of the fiscal year compared to first half of last year. We continue to maintain a healthy balance sheet with net cash position. Going forward, with the uncertainty around COVID-19 remaining, it is difficult to predict how the situation will evolve. We are taking all necessary steps to ensure that the safety of our employees and business partners are the number one priority. Thank you, and over to you all for Q&A. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Prakash Agarwal from Axis Capital. Please go ahead.
Yeah, thanks for the opportunity. Good evening and congrats on good numbers. So first question on the India business. So if you could help me split the RX share and the GX.
So trade generic is about 27% of our overall India sales for this current quarter and first half. Obviously, in this year, trade generic has grown faster than the prescription business, so it is not at normal levels. On a normalized level, it was close to 20% last year.
Was 20% last year. Okay. And what would be the rough growth that we would have seen in trade generics, chronic and acute, very roughly?
I think bifurcation, we normally don't give, Prakash, so we like to refrain, not start a new practice. But I can broadly tell you that acute, obviously because of anti-infectives, reliance was muted and it was in like very, very low single digits to almost flat, the acute side. Mm-hmm. Trade generics had a very healthy growth rate of 20% plus, but and chronic was like average.
Understood. And what I'm trying to understand here is that once the COVID situation normalizes, would we continue to focus on trade generics as a 20% average, or would it go up, down going forward?
Yeah.
How do you think about that? That's one. And secondly, in the acute, I think there's a clear bifurcation that is happening. So the vitamin is showing a very good growth. Gastro is showing growth, whereas anti-infective is not showing growth. So once anti-infective comes back, do you see, the trade generic share going back, or how do you think about it?
No, so Prakash, there are two things in your question. See, trade generic as a percentage has gone up, not only because they have done phenomenally well, it's also because the prescription business has gone down, right? So there's no question of trade generics grew because we focus them more. We always focus, therefore we are like number 2 company in India. So that has been business as usual, but all COVID-19, what it has done, it led to supply disruptions for prescription business, where trade generics could capitalize on. Point number one. So as a percentage of revenue next year, it would certainly come down because I see prescription business bouncing back. Coming on your acute side, I think you're right. Multivitamins and things have shot up because of immunity, and all that going on. So that will continue, but I see antibiotics bouncing back as we open up. So as a percentage of sales, antibiotics will certainly go up next year. But I don't see multivitamins slowing down too much because people will take a lot of time to get rid of those habits they have formed over the last few months, and the fear will also not kind of completely go away. So you'll not see a drastic drop in multivitamins. Thank you.
Okay, great. And second question on the balance sheet side. So clearly the cash flow has improved. What do you plan to do with the cash? And if you could help us understand, because the balance sheet does not carry the near-term cash balance. So what is the gross debt and net cash? I
think Mr. Dubey, you can answer the second part, and then strategically I will answer him on the plans with cash and all that, Dubeyji. So over to Mr. Dubey, please.
Prakash, as on 30th September, we have cash equivalent to 418 crores, positive cash. If you recollect, as on 31st March, it was on negative side. So we generated cash. It was negative. It was overdrawn balances, and now we have positive cash of 480 crores.
Yeah. Okay. So Sandeep sir, how do you plan to use the cash? What is the going forward capital allocation policy?
Capital allocation policy remains unchanged, sir. 25% of PAT, 20 to 25% will go as dividends, and. Prakash, when we really accumulate significant cash, that's the time we can have this conversation, Prakash.
Sure. Thanks. I'll join back the queue.
Sure. Thank you.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and one now. The next question is from the line of Nithya Balasubramanian from Bernstein Research. Please go ahead.
Yeah, hi. My first question was on the gross margin line item. The gross margins have come in a little lower than quarter one. If you can help us understand the reasons for that.
Mr. Dubey, I think you could take that.
Yeah. So you're very right, Nithya. Actually, gross margin, it has come down because of two reasons. In quarter one, there was one-off. There was a technology income which was there in quarter one, and in quarter two. As like quarter one, there was a positive side of one-off. There is a negative side of one-off in quarter two also. So that is on account of IGST refund, which was on lesser side. So I think, but our view is we'll be able to maintain our gross margin to the level of 60 to 61%, which is normal kind of gross margin.
Got it. Just to follow up on that, so given the trade generics contribution is higher, has that also served to bring gross margins down because you see lesser gross margin in your trade generics portfolio?
Yeah, but trade generic contribution, if it increases, yes, of course, to certain extent it makes impact. But in our ethical, we have better mix. Actually, vitamins, just now what our managing director he referred, or Prakash referred, and these products, they have very good margins. So our mix is giving positive, so it is offsetting contribution of generic to certain extent.
Got it. Thank you. My second question was, maybe Sandeep, you can help me here on the sales and marketing expenses. So I think the commentary that we heard last quarter was that a lot of these costs, now that the market is opening up, a lot of these costs are likely to come back. But I'm actually pleasantly surprised to see the extent of cost control on that line item. So a question around, do you see this being sustained going forward? Or do you see a lot of these costs coming back now that the market is opening up even further?
Yeah. So, as they usually say, that the truth is somewhere in between. So all of it will not come back because I think we, along with all pharma companies, have kind of learned a few things in COVID-19. So, obviously the expense will go up from here, but I don't see it going back to pre-COVID days completely. So I think we can still save up some money even next year. So that's my answer. Is there anything specific? I'm happy to answer you.
So can you help us understand what kind of savings? What are some of the ways and means through which you're likely to sustain savings post-COVID as well?
I think there are plenty of things, and Mr. Yogesh can come on that, President of Chronic Business. But as you know that, lesser calls are happening, so your travel is going down, and a lot of CMEs and all that are moving to online. So Yogesh, maybe you want to pitch in there.
See, major marketing inputs usually during routine times are, this doctors' tabletop reminders and, journals, books distributions, conference participation. They contribute close to around, 25 to 30% of our marketing, or maybe a little more than that. So I think that these few of the things have permanently changed. Even post-COVID also, we don't expect, doctors to go for similar kind of a tabletop reminders. The conference participation we don't see even happening till third quarter of 21 also. So those will be major savings which might get sustained till second or third quarter of next year. So that's how we are seeing, change. Now what our MD also said, and we are also experiencing, some of the permanent changes which might happen, what we are learning COVID, is majority of the conference now, CMEs and all have become online. And they are becoming more effective, and this is also saving doctors time to travel and all. So I think this will become a permanent feature in pharma industry in future as well. So that will continue the saving.
Understood. Any other structural changes you see in terms of span of control or reduction, and would you be able to do more with the existing set of people, or a fundamental reduction in the number of reps that you need to sustain the same revenue levels?
Not really. We know that this is temporary phase, and within year or 2 years, we should normalize. And, whether getting talent today in the industry is not so easy. So as of now, we are not thinking of rationalizing field force. Neither we are working. There minor change may happen in SOC span of control, but from overall field force side, no major changes.
Thank you so much.
Thank you. The next question is from the line of Damayanti Kiran from HSBC. Please go ahead.
Hi. Thank you for the opportunity. First, clarification on balance sheet items. So we have seen a sharp reduction in payables, which declined around 245 crore compared to March level. So if you can explain that. Similarly, if you can explain the rise in inventories.
Mr. Dubey?
Yeah, Damayanti. Our payables, it has come down because we just wanted to optimize our procurement. So some early payment we have made. Some procurement, it has happened against advances also. And mainly reason is on account of that.
Okay, so this might be temporary phenomena, right? And it should see reversal in second half?
To certain extent, actually, our procurement from MSME parties, their payment it has to made within 45 days. So actually, whatever addition has happened on that is going to be a permanent. And rest of the thing, it will get normalized.
Okay, and on inventories?
Inventories, in fact, if you see, it has come down from June. Actually, our inventory is on lower side. But purposely, during COVID period, we wanted to have more inventory here in India as well as in overseas market also. So immediately, we don't think in next quarter on inventory front, any major correction we need to do. We require inventory for our business requirement.
Okay, so it's broadly in line with increase in business, right? That's why. Okay. Okay. Second question is regarding the India growth outlook. So second quarter obviously used to be our heavy quarter, and with COVID disrupting anti-infective sales and other key acute therapy sales, how should we look at second half growth, and if you can provide some visibility on how should we look at operating margins in near term or near to medium term?
Yeah, so, I'll comment on the growth outlook and kind of refrain from the operating margin comment. See, October we revival, and I think that must be broad in line with many companies, but we certainly see a growth revival. So we're optimistic that, unlike the past where in Q2 we kind of had the best of growth, I think our growth would be coming in the next few months, and we see double-digit kind of growth coming back.
Okay, so compared to say earlier period when we had majority of sales coming in second quarter, it should be more distributed. As you said, October saw good revival.
Yes, but please take my comment with a pinch of salt. You never know how things are. October is still just 1 month, and how things and how we operate at all India level because of COVID and all. So just be cautious on that. But October was good, just to share with you.
Okay, so if you are not commenting on operating margins, maybe you can just update us, like the marketing and promotional activities, though like there is digital component now there, but are all of your reps are back in field, or what is the situation there?
Okay, so our field force is almost 100% on field now. And in terms of doctor coverage, almost 80 to 85% doctors coverage we have reached. We used to have a doctor call average of around 10 or 11. We are almost 8 to 9. So by and large, 80% of doctors' activities have begun. And we are also seeing a decent number of patients now, footfalls in doctor clinic as well. So almost, I would say 70 to 80% footfall is back.
Okay, that's helpful. Thank you for your answers. Wish you all the best.
Thank you.
Thank you. The next question is from the line of Neha Manpuria from JP Morgan. Please go ahead.
Thank you for taking my question. One question on the India market. We'd heard that, I'm assuming this would have benefited ALKEM too, that large brands in a few segments particularly benefited, during COVID. And I think that's reflected in, our above market growth rate for COVID, for acute segments. Once things normalize, will we be able to keep this, market share gain that we have seen, or do you see, this as a temporary phenomenon and we'll probably lose out on all the incremental share that we are picking up?
No, I think we will not really maintain, we might continue the momentum because, as you know, Neha, what has happened during COVID times, a lot of small regional companies found it very difficult. And they would perhaps not come back. Also, what happens, like, doctors will now be more selective with whom they meet and all. So the smaller companies will get squeezed out. So you'll see that not only ALKEM, but companies with large brands, with good brand equity, they all have gained market share. And I don't see that reversing anytime soon.
Mm-hmm. Understood. My second question is on the US business. There seems to be some moderation quarter on quarter. Could you give us some color? Was this because of higher pricing in some product, or what was the reason?
Yeah, Mr. Gare, can you please take that?
Yes, thank you, Sandeep. So the answer for that obviously is that the summer months or quarter two has always been a little low for us. So that's one of the reasons. And the second reason, of course, is we had more launches in quarter one and perhaps in the quarter four of previous year, which kind of carried forward in quarter one. And unlike that, in quarter two we had less number of new launches. So and the price deflation is always there to contend with in the generics business. So a combination of all these is resulted in small degrowth on a sequential basis.
And Amit, if I may ask, what is our expectation for launches in the second half? How many did we do in the first, and what's our expectation in the second half?
Right. So first half we have done 7 launches, 6 or 7 launches. I don't know the exact numbers. I'm sorry about that. And during the last call, if you recall, we had given an advice that this year we will end up doing double-digit launches. So I'm expecting between 10 to 12 total launches during the fiscal year.
Understood. Okay, so similar number of launches in the second half.
Similar number of launches as first half in the second half, yes.
Yeah, okay, understood. Thank you so much, Amit.
Thank you. The next question is from the line of Kunal Randeria from Edelweiss. Please go ahead.
Hi, good evening. Just coming back to the even before the call.
Sorry to interrupt. Kunal, we are not able to hear you clearly. Your voice is breaking.
Sorry, I hope this is better now.
Yes.
Yeah. So, Sandeep, even before the COVID hit, your other expenses, excluding R&D, had been growing only in single digits in the past 2 or 3 years. So now with this COVID-related savings, would it be fair to assume that in the next 1 year or two, these expenses will grow in single digits in absolute terms?
Sorry, I didn't understand your question. Which expenses are you talking about, sir?
So other expenses, excluding R&D, other operating.
You're not clear.
Sorry to interrupt. Kunal, your voice is breaking again.
Sorry. So the other operating expenses, excluding R&D.
Yeah, what about it, sir?
So in the last 2 or 3 years, we have seen that your other expenses have increased only in single digits. Now with COVID-related savings, would it be fair to assume it will increase only in single digits in the coming years ahead?
Yeah, I would think so. There's no reason for it to grow more than the historic, and no relation with COVID, I think. So I think that's a fair assumption, I would say.
Right. But then, Sandeep, then would it be fair for us to assume that the guidance, aspirational guidance that you had given of reaching 20% plus, you'll overshoot this by a fair margin in the next year or two?
What do you mean by a fair margin?
I mean, if your revenues are growing in double digits and expenses are growing in single digits, then you could probably be maintain a 24-25% kind of a margin, sustainable margin from it.
For the year?
Yeah, in the coming years, maybe next year or in year after that.
No, I don't think so. That would be very easy to reach a 25% margin on annually.
Okay.
That's a little too much, I think. But yeah, 22, 23 is something more realistic, I think.
Right. And my second question is on the US business. So we have a fair base now, around $320 million. So I'm just wondering, what are your thoughts on the profitability of this business going forward?
So what do you mean, sir? Like, what are you wondering?
No, so I'm just thinking profitability would be maybe in single digits today. How do you see yourself 2 or 3 years down the line as far as this business is concerned?
We have already said we don't give out profits of US business, but broadly, I will reiterate our aspirations. Return on capital, we kind of have our target to reach 15%. Of course, we are not there anywhere close to that, but I think in the next 2 to 3 years, we have a very decent shot at reaching that. So I continue to believe that US is a large market, and the return on capital will not be as good as India, but it is still decent.
Okay. Fair enough. Okay. Thank you. Thank you, sir.
Thank you. The next question is from the line of Abdul Puranwala from Anand Rathi. Please go ahead.
Hi. Thank you for the opportunity. I have 2 questions specifically on your India business. My first question is related to the API supplies, which you would normally get from a third party. Are we seeing some, price increases there, or the material cost going significantly up because of the outbreak of COVID? And any thoughts on that? And second would be on what would be your sales derived from the India business, which would be dedicated towards hospitals? And when you say that the second half would be quite well, are we factoring that the footfalls for patients should improve in second half, and that makes us confident about the revival in India business?
Yeah, on the RM price, we don't see a major issue. If your question is on quarter 2, the RM prices have not kind of moved up overall. We had some issues in quarter 1, some kind of tension because of India, China, and KSM issue, but quarter 2 was pretty stable. Your second question of what percentage of business comes from hospital, we don't have it, we can pull it out. But to answer you, the reason I said that H2 will see a revival was not just because of hospital. A large part of our business comes from OPD and GPs. There we are seeing footfalls increase and unlocking happening. Therefore, that was the reason of my being optimistic. not so much hospitals. But yes, hospitals would also open up, operations will start happening, and we have a decent, antibiotic injectable portfolio. So all that will also start increasing. But it's not driven mainly just by hospitals. We have a very general practice as well.
Sure. Just to follow up on my first question related to the raw material prices. So, can you share some outlook of how the second half or, maybe FY22 would be? So I basically relate this with the higher inventory level, you guys have on the books currently. I understand in the previous questions you have answered this partly, but just wanted to understand from a raw material perspective.
On FY22, I think if I try to answer it also, it would be wrong because in a very dynamic world, socio-politically, so I can't comment for something that's going to happen, say, 12 months down the line. But for the next few months, I don't see any major issue. Now, of course, if we continue to have certain issues with, our neighbors and all that, then we could again see some issues happening. But internally, we have kind of procured more or planning to have a decent, raw material inventory because in case things go bad, then we'll have certain things. So I honestly cannot give you a very good visibility. My knowledge is as good as anyone's. But things are not as volatile as it was, let's say, a year back.
All right, sir. Thank you for answering my questions.
Thank you.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and one now. The next question is from the line of Shrikant Akolkar from Ashika Stock Broking. Please go ahead.
Hi, good evening, and thanks for the opportunity. So I would like to know about one of the products in your pipeline, dimethyl fumarate, where we have a tentative approval and we have seen some of the launches by the competitors.
Yeah, Mr. Amit Khare, please.
So we received the final approval and we've launched the product also in the market.
All right. And what would be the market share at the moment?
No, unfortunately, we haven't garnered too much of market share on this product.
Okay, all right. The other question is on the export incentive impact. So I know that this quarter probably was less impact, but how should we look at the next quarter for the export incentive?
Yeah, Mr. Dubey, please.
Yeah. So, you are very right. Actually, next quarter, there is a capping of 2 crore on the export incentive. So, obviously, it's a material amount in our financials. So, that impact will be there. But after that, actually, we are also not very clear how government is going to compensate. So, as you know, roughly 3.5 or 4% kind of export incentive is always there on exports. And so that impact is there. Next quarter, I think roughly around 0.75 basis point or 80 basis point impact it is expected.
Okay. And the last question is on the biosimilars in Indian market. So where have you reached so far in the launches of key biosimilars?
Yeah, I think key biosimilars will be start launching in quarter 4 of this financial year. If all goes well, we'll have 3 approvals in the biotech space. 2 of them will be peptides, which for me are also biosimilar to or biotech at least, and one of them would be a mAb. We will launch these from say Jan to March in between.
All right. Thank you for the answers.
Thank you.
Thank you. Next question is from the line of Shanti Patel from ST Investment. Please go ahead.
Sir, I just wanted to know what is the return on capital employed and return on equity today, and are you planning to stick to that in next 2-3 years also?
Mr. Dubey, but we didn't catch your last part, but
you see, what is the return on capital employed and return on equity today? And are you going to maintain the same or increase in the subsequent 2-3 years?
Okay.
And what is your plan? Yeah.
Understood. Mr. Dubey, you could answer the first part.
Yeah. So return on capital employed, yes, of course, now it is somewhere close to 20%. And I think we'll keep on doing improvement only going forward. There is no question of why we should not maintain that. Definitely we'll maintain that, and in fact we'll improve.
And what about return on equity?
Return on equity also, same thing applies there also.
We don't have any borrowings today? Long-term loans?
No.
We don't have any long-term loans because return on equity and return on capital employed will differ if there is a long-term loans in our balance sheet.
We don't have any long-term borrowings. That's the reason why I said.
Approximately 20, and it will go on increasing. Okay.
Yes.
And second question is, where we stand as far as the market share of our product is concerned in the industry.
So you are referring our market share in domestic?
Yeah, market share in the industry and where, correct, where we stand in the market.
3.6% overall, sir.
Sorry?
3.6% overall is a market share in the Indian pharma industry. This is excluding trade generics.
Oh, acha.
Yes.
That's all. Thank you, sir. Thank you.
Thank you.
Thank you. The next question is from the line of Rishabh Sheth from Karma Capital. Please go ahead.
Yeah, hi, Sandeep. I wanted to understand from you slightly more in terms of the biosimilars, biotech, whatever you want to call it, strategy. We've invested significant amount of money, at least in the capex side. So, what's your thought process? And of course, I heard you hope to launch 3 products early next year. But broadly, wanted to understand how you're looking at this space.
Yeah, great question, sir. So you're right. We have invested a lot of money in this, in capex and opex both actually. As we all know, sir, see, this is a long-term game. We ultimately will realize, fruits of our labor only when we enter regulated markets. If it was only for India or ROW, we very well much would have just in-licensed it, like a lot of our friends have. So ultimately, we want to enter the US and Europe. But this I don't see happening in the next 3 years. Ultimately, only from 2025 will we start seeing some significant traction in terms of getting, large business and your ROC and all. So biosimilars will be a long gestation period, but we do have ambitious plans. But we're not able to throw more light because we are in early days, and we'll have to see how we go about it.
So, is it that you want to be, like other players, you want to file your own dossiers and you want to file your own product, or are you going to do a tie-up with someone and do contract manufacturing? What's the strategy? I mean, I understand it will take some time.
Yeah.
But just wanted to know how you're thinking about it.
Sure. Yeah, I'll tell you very briefly what I'm thinking. So I will not be able to lay down all the strategy in front of you and my thoughts. But, for ROW and India, we will be able to do it ourselves. ROW will have to out-license, and some of the countries will be able to do it ourselves. But the first few products in regulated markets in US will out-license. You rightly asked about what about CDMO and all. I think those are opportunities as well. And we will tap into those. We will take time to evolve and really freeze on to a strategy. But CDMO also is very interesting, and we think we'll get decent traction there as well.
All right. Thanks so much.
Thank you, sir.
Thank you. The next question is from the line of Prakash Agarwal from Axis Capital. Please go ahead.
Yeah, thanks for the opportunity again. Just some accounting questions. So CWIP, what is sitting there, and when do we plan to consume it?
Mr. Dubey?
Yeah, CWIP, Prakash, no. Whatever project is in progress, that is the amount sitting over there. Yes, we do have some ongoing projects at Indore, as well as some routine kind of modification and automation happening at Daman as well as at other locations also. So these are lying in CWIP, and in due course it will get capitalized. Most of it will get capitalized in third quarter or fourth quarter
of this year.
Yeah.
The Indore facility will get capitalized.
See, in the Indore actually it's an expansion. So Indore expansion, Indore is already capitalized last year itself. So expansion, whatever is happening, it most probably in third or fourth quarter it will get capitalized.
Okay. And what would be the annual capex for this year and next year, and also the tax rate, sir?
See, capex so far actually because of lockdown and because of COVID, our capex so far it's not significant amount, but year-end capex we expect to be somewhere in the range of 325 to 350 crores, and I think always we give similar kind of guidelines. Even next year also similar kind of capex we expect going forward also. As far as tax rate is concerned, you must have seen it is 13%. And actually, we decide our annual effective tax rate, which is applied in quarterly. So we'll be somewhere 13 to 14% kind of tax, and that is in line with our guidance given.
And next year, sir?
Next year, somewhere around 1 to 2% more what we are having right now. 1% more, you can see, because whatever export is increasing, actually our effective tax in that line, it will increase little bit.
Okay, perfect. And last one clarification. So double-digit growth guidance for second half or for next financial year?
This is for H2, domestic, yeah.
Okay, this is RX growth guidance, right?
Yeah, RX growth.
Perfect. Great. Thanks and all the best.
Thank you. The next question is from the line of Tushar Manudhane from Motilal Oswal Financial Services. Please go ahead.
Sir, just on this operational cost saving on the domestic formulation side, when let's say hypothetically if we are out of the COVID by end of the financial year or maybe one quarter of FY21, first quarter of FY22, the cost saving, would the improvement in the profitability will be a structural, or you think that being that pharma industry being fragmented and having a steep competition, so you'll have to spend more to maintain the market share?
Yeah, I think what I said in the few minutes back. I think it will not go back to the pre-COVID times. Expense will go up, no question about that next year. But I don't see it. So it's a structural change, but don't take this quarter's benchmark as a recurring theme, please. So, for example, if you have 27 EBITDA, don't assume that will be next year.
Got it. Secondly, would you like to call out for the operational expenses for this biosimilars facility where the revenue is minimal at this point of time?
We have not shared in the past, right, I guess. So you want to know the annual, what exactly do you want?
Yeah, annual operational expenses associated with this biosimilar facility.
So I think per year we are spending close to 80 CR there.
Okay. And any change in the outlook for the international business?
No, we continue to be
ex-US.
Ex-US. Yeah, ex-US. If you talk, then there's nothing much remaining. But I'll let Amit answer.
Tushar, we continue to focus on few geographies, and I think that has been our strategy for the last 3 or 4 years, and we are going to continue with that strategy. We are seeing, a good amount of growth in the key markets that we are focusing, and at the same time, obviously, there are non-focus markets that we slowly do away the business, and therefore you see muted growth. I think going forward also the growth is expected on similar lines overall.
Okay, that answers my question.
Thank you.
Thank you. The next question is from the line of Aditya Khemka from InCred Asset Management. Please go ahead.
Hi, good evening, gentlemen, and thanks for the opportunity. Sandeep Bhai and Dubey ji, congratulations. Very good to see cash flow coming through, as was promised to shareholders. That is very encouraging to see. Two questions. Firstly, on the asset utilization side. So, we talk of US as a growth engine. I understand that. We have manufacturing capacity. So where do we stand on an average on our asset utilization for US?
Yeah, I think asset utilization is close to 70% of running of plants. So Indore is not commercial yet. So I'm excluding that from what I have told you. And also a large part of, some part of our Daman facility we have expanded, which we have not yet commercialized. So those two parts, if we remove, we are, I would say 70-75% we are at capacity utilization.
Right. So Sandeep Bhai, if you include Indore and Daman extended capacity,
right.
How many years can we go with growth in our US business without extending more capacity?
Good 3 to 4 years, I think.
Good 3 to 4 years.
Yeah.
Okay. Makes sense. And second question, on the chronic side of the domestic business. So you made a comment that, the smaller marginal players are obviously. Yeah, I can hear you, Sandeep.
Sorry, no. So that there is no confusion.
Yeah.
I'd just like to take you back to your first question. So I stand by that next 3-4 years, there will not be anything required. But if we pick a new therapy area or a new kind of thing, then there's a different ballgame. There's nothing, but I'm just letting you know.
Yeah, but when you give such disclaimer, Sandeep Bhai, you invite the question. So what are you planning new?
Okay, you can please ask me.
Any new therapy area that you are considering, entering in terms of the domestic business?
Still considering, then again it's slightly premature. We have not decided. But the reason I brought it up, because if you assume that we'll not do anything for sure next 3-4 years, that may not be correct.
Fair enough.
That's why.
That's fair. That's fair. And so my second question was on the domestic chronic side of the business. So, you made a comment on the acute side of the business where you said that the smaller regional players are obviously finding it hard to survive and the bigger brands are gaining share. My question to you is, I understand you're not a small company, but in the context of chronic, you are a new player compared to some of the incumbents. So what has been the experience of your chronic brands versus the incumbent brands there? I mean, are the incumbent brands gaining market share on you in the chronic space?
Yogesh, please.
Yeah. So see, chronic, within the company we may be small, but just want to share that overall chronic we are ranking 15th in the industry. So not the the bottom 20 or 25 or 30 types. And then incidentally within chronic, in last around say 3 to 4 years, we have brands which are the size of 20, 25, 30, 40, even 50 and 100 crores also. So those brands are they have a large base. So if you look at our cardio and diabetes portfolio, we are growing at a very healthy double digit, which is higher than the market growth. So these are driving our momentum and will not impact this COVID or maybe small size. So our value may be overall low, but our brand sizes are bigger.
But quarter 2, Yogesh, we had certain impact, right?
Yes. We
Understood. And last question, Sandeep Bhai, on the strategy side. So, we hear a lot of pharma companies now talking about digital marketing, and you're also saying that some of the savings in the domestic side would continue because, and I'm assuming when you say continue, you mean that those same things will be done digitally or virtually versus being done physically. So can you speak a bit about as to how ALKEM is, utilizing the digital technology and how are you guys, making a platform, so to speak, to leverage on that side of the business?
Thanks, it's a good question. See, digital marketing is something which, is kind of was not very developed in the pharma industry, at least in India, and COVID has kind of given it a push. So what we have done, we have kind of made our own platform from scratch for telemedicine, and we have kind of taken it to a lot of doctors. We're getting good traction. So ultimately, telemedicine is the beginning, but we can put layers on it, and it can become a full digital marketing outreach where we can have webinars and medical conferences and medical journals. So theoretically, at least, if it all goes well, it can start substituting for feet on street. Not now, but maybe 5 years down the line. Second thing, there are a lot of calls. Like I was also surprised when my team told me that they have done a lot of calls with doctors on Zoom, which we were all thinking it's not possible, it's not going to happen. But it has happened. Now, all of it will not stick, but some of doctors and patients and our medical reps are going to operate in this new world. So coming back, I think telemedicine was something which we took a major initiative. It's called Connect to Clinic. You can, and I think we are gaining a lot of traction. We have maybe 20,000 doctors on it.
Yeah, 20,000 already.
And what's the total target there, Sandeep? 20,000 doctors today, but how many doctors can you get on that platform?
Yogesh, you are leading that again.
We are aiming, maybe around 10 to 15% of doctor universe in our MCL. That's what we are targeting in a year's time.
And how much does that translate to, Yogesh, on an absolute basis? I am not aware of the universe that you're
around close to around 1 lakh plus doctors.
1 lakh plus doctors. Understood. So thanks a lot, gentlemen, for answering the question.
Tough question.
And all the best, guys. Thank you.
Thank you.
Thank you. The next question is from the line of Akraj Shah from Tata AIA Life Insurance. Please go ahead.
Thanks for taking my question. On the chronic side, while we have been growing on the cardiac and anti-diabetes side, in the first half of this year, we've lost significant market share in neuro and derma. So while derma, I can understand we were underperforming for the last few years. But what's happening on the neuro side specifically?
See, neuro, as a therapy is among all is very small in terms of doctor population. So if you look at derma, there are 9 or 10,000 dermatologists in the country, right? In cardiologists and diabetologists, you have close to around 25 to 30,000 doctors who does cardio and diabetic practice. But neuro and CNS, revolves around 2,000 and 3,000 doctors. So we got impacted the most because our suburban market where prescriptions now are growing more than the urban markets. So we got impacted more in urban because this is the place where most of the neuro and psychiatrist practices. So our suburban prescriptions got badly impacted, or you should say a tertiary uptake got impacted. Okay, so if you see on a prescription front, we are not bad, but on a volume front, we got a little impacted. But I see a clear recovery. In October, we have grown reasonably good. So I see next 6 months should be a recovery path even for the CNS business also.
Then in terms of the presence of molecules, so on the Alzheimer's side, is it that the Alzheimer's has suffered during the COVID times?
Yeah.
Yeah.
For molecule, donepezil, which is the largest anti-Alzheimer molecule, that itself is degrowing by minus 17%. So, which was, in chronic, usually it is not seen. But the one brand of the CNS portfolio, the market itself is degrowing negative. And that also has some impact in the portfolio.
Okay. And on the derma side, what are the steps you are taking for the long term, at least, to get back to growth?
See, derma, we are very clear that there is long, portfolio in derma. We are rationalizing this. We have picked up 3 or 4 key brands which are, mass kind of a promotion. So not just to dermatologists, there are certain brands in derma like antifungals and all which can be promoted to mass number of doctors. So while on a derma front they are doing good, but their scale of promotion is too small. So that strategic change we will definitely do, and you may see that results coming in another 6 months, 3 to 6 months time in derma as well.
I think that's it from my side. All the best.
Thank you. The next question is from the line of S. Mukherjee from Nomura. Please go ahead.
Yeah, so thanks for taking my question. Sandeep, on this, how you're thinking about the domestic market, given there is stress on the broader market, your brands have gained market share, so obviously COVID has impacted. And my question is, does inorganic moves make sense in this market? Your cash flow, balance sheet is healthy, your margins have kind of expanded quicker than earlier expected. So any thoughts on inorganic, or you still want to be like, building things through partnership and organically only?
Yeah, no. So, by and large, our DNA remains same, that we want to build things on our own organically. However, we, are open to acquiring brands in chronic of reasonable size. But what we have sensed, because we have kind of scanned the market a little bit more in the last few months, that value expectation chronic continues to be sky high. And so I think that's one big hurdle. So I think that would be a stumbling block, because anything in chronic, especially cardio-diabeto, they don't want to give in anything. And if they want to give it, they want to give it at a very exorbitant price.
Okay. And the second question, on the domestic market only, I mean, from a channel perspective, how are you seeing e-commerce and general consolidation happening, and what kind of thought you have around, pharma companies down the line? Do you expect e-commerce to be a meaningful, driver, and what are your expectations? Anything you're seeing you want to share?
Sure. No, I think that's a very valid and a very long-term question and important both. So see, to be honest, as long as the industry practice and the law is that the prescription generated is honored, or by and large honored, I think e-pharmacies will not have a big say in terms of squeezing pharma companies. But so I think till that law, the Drug and Cosmetic Act on that is very clear, I think we are okay. But once that starts changing and e-pharmacies become bigger in the next decade, and if they are aided by some regulations like that, that could be a cause of concern for domestic industry. But I don't see that happening for a long time, because unlike the West, where you have large chains who control large market shares and it's a genericized market, therefore they kind of start negotiating and they become very large. I don't see that happening in India for the next 5 to 10 years. Beyond that, I cannot take a guess. But I'm saying there is a rider that as long as the Drug and Cosmetic Act is in our favor. Once that changes, then a lot of things will change fast.
Okay. And just one question, if I can ask you. I think one of the questions you talked about biosimilars, and you mentioned about regulated market, and also a timeline for the next, I think, 4 or 5 years, which would mean you would have to start making some, significant investments 1 or 2 years down the line. Is that a right assessment, or if you want to share, like, what kind of R&D you would like to do on, biologics for developed markets?
Sure. So first, I would like to reiterate that it's my job to kind of steer the company with the right financial discipline. So 6% of R&D will spend of revenue will spend on R&D. Now, how we break up small molecules versus biosimilars, which is a kind of a new challenge for us, that is something which we will navigate. But overall, I don't see us reaching that 6% of revenue on R&D, irrespective of what we do. Yes, biosimilars will take some time and money. Therefore, what we plan for regulated markets is basically just 1 or maximum 2 molecules in the next 5 years. We will try to monetize it, before we hit regulated markets, more from ROW and India, and we can do some deals in a lot of countries where they want to in-license. So I'm very conscious of that fact, but I will not let that go beyond 6% of R&D, of revenue, sorry.
Yeah.
Expenditure.
Okay. Thank you very much.
Thank you, sir.
Thank you. The next question is from the line of Neeta Desai, an individual investor. Please go ahead.
Hi, it's Neeta, SMITA. This question is for Sandeep, but you had mentioned the research and development investment increasing in the U.S., so congratulations for that. I am curious about what segments in particular, what problems the scientists are working on in America and India for ALKEM. So what solutions are they addressing?
Your voice is breaking.
Oh, okay. Should I start over? Can you hear me now?
Your voice is not very clear.
Hello?
Ma'am, the audio is still...
Can you hear me at all? Okay. Hello, is this audible?
Yes, ma'am.
Yes. Go ahead.
Okay, I'll start over. My name is Meeta, SMITA, not Nita. My question is, first of all, congratulations about the investment increase in research and development in the America company. And I'm curious as to what research segments in particular are looking most promising and which problems and solutions the scientists are working on for ALKEM in both India and America in the R&D department.
Yes.
And this is for Sandeep by this question.
Yes, I'm answering, yes. So, we being a generic company, we invest in R&D by and large of drugs which are off patent or we want to challenge the patent. So, we are not very, driven by therapy areas, or we just chase molecules and things like that. We are not very therapy area driven. What they are doing in US, I think in US, we are developing some API process for controlled substances. That's what we do there. And also we are developing some formulations which are controlled substances like, which are controlled by DEA, which you cannot import or export from India. So I think that's what we're doing in US.
Okay, so you're basically replicating existing brand name molecules but making them generic?
Absolutely. That's a business model, ma'am. Absolutely.
Thank you, sir.
Thank you.
Thank you. That was the last question. I would now like to hand the conference over to Mr. Kakan Borana for closing comments.
Yeah, thank you everyone for attending this call. Again, if any of your queries have remained unanswered, please feel free to get in touch with me. Thank you.
Thank you. On behalf of Motilal Oswal Financial Services, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.